Hola guys, ¿qué pasó? What's going on? This is Hala Pablo. Good morning. Good morning to everyone. Well, Texas time, good morning. I thought we'd look at Ethereum real quick. I want to show you something, a little trick that I use. I don't usually put this on my charts, but it's something that comes in handy every now and then, and it's with the anchored VWAP. VWAP stands for volume weighted average price, and it's basically the daily average of the price according to volume. If you need to go more in depth, if you want to find out what VWAP is, you can Google it. But I kind of use it as it could be used as in the Wyckoff sense. If you know anything about Wyckoff, there's a feature or a thing called the ice or a creek, and it's basically they are resistance, support and resistance, very, very loosely drawn around the highs and the lows of a given trading range. And like, for example, let's see here, if I could show you what I mean. If I get, say, this brush here, like this, see this, this line, this support line, I'm kind of drawing loosely around the lows of this range. Let's say like this is the selling climax here, and up here is the automatic rally. And this down here is the sign of weakness or the secondary. Well, really the secondary test is here. We'll call this a sign of weakness. And this is the secondary test. And so down here on the bottom of the ranges, we have these lows. There's another low, so it came up here. And then the same way around the automatic rally, we have the highs, if we can call this. Let's just say like this here is a UTAD. And that presupposes that where we are currently is in last point of supply, or LPS. Y. All right, so this current range in LPSYs are redistributions. So this would be these loosely drawn barriers, or this like resistance line here that stretches from the automatic rally to the UTAD, and here the support from the secondary, rather from the selling climax, all the way up around the sign of weakness and up to these signs of strength, and these retests along this new kind of redistribution range here would be the same as what we would call the ice or a creek in Wyckoff. It is a creek when it crosses over and the price action accumulates. We like to say we jump over the creek, and that could be a sign that the price is going to mark up and we're going to have an accumulation. And then also, if the price is going down, we don't know the bias, but we have drawn these barriers and the price action falls through or transgresses to the lower through this support and resistance, then we call it falling through the ice. So if it goes up, it's a creek. If it comes down, it's the ice. And so that said, here, let me erase this. The VWAP, the anchored VWAP, volume weighted average price, is a feature that's found on the drawing tools on the side of the toolbar, on the left-hand side of the toolbar on TradingView, and this feature here can be helpful in determining the ice and creeks of a range. It's not 100%, but it helps you with your bias after you've weighed everything else into consideration with the price action, and also with the volume spread analysis, which is the relationship between the volume and the spread of the candles. And then also we look at the geometric structures of the price action. We take all of these things into account when we judge, we try to judge the bias of a given trading range. And the ice and creek features of Wyckoff is just kind of like another kind of tool that we could use to build a case as to whether a range is going to accumulate, reaccumulate, distribute, or redistribute. And so for the ice and the creeks, what we can do is when we determine a new trading range, like this one here, say it stopped off, we had this markdown from up here, this triple top. From here, this is obviously a distribution, and the price distributed all the way down to here, and this would be the selling climax. This would be the low. Basically, it mitigated the sign of weakness here. So we have these double lows. In Ethereum, I'm thinking we're in Bitcoin. This is Ethereum. So let's just call this the $1,080 or $70 low here. So we have this double low mitigated at 1,080. We can anchor the VWAP at this area here. So you just select it and click on it. Boom. And so we have this blue line that runs through this trading range. And that is the VWAP. Actually, I'm going to go ahead and remove all the drawings, and I'm going to redraw the VWAP, anchored VWAP, off the low. And there's the low. And so we see here the price action has fallen through the ice. We can see this as a fall through the ice. And then presumably here at this UTAD, and the price action is now trending beneath the ice. It hasn't come up through the ice. If it comes back up through the ice, then we can say it jumped across the creek, and now we could have more of a potential accumulation bias on this range. And likewise, we can go off the high, just like we would draw like Fibonacci, how you go off the swing high and the swing low. We do that with the anchored VWAP. We already went off the selling climax, the low. It's giving you the average. That's why this line didn't start all the way down here. So it's not like a traditional drawing a line along the barriers of the lows. It gives you the average. Remember, this is the volume weighted average price. That's what VWAP stands for. And so we can get a double bias. So we see currently that we're underneath the VWAP. The price action has fallen through the ice. In this case, remember, this would be the ice now because we've fallen through the ice. So we have a distributional bias. And just to have like another opinion, we can go off the high of, let's say, like this UTAD here. If this is a last point of supply, that would make this area a UTAD. And we click that as well. And now we get another VWAP based off the anchored high of this range. And this also puts us underneath the ice that we've fallen through. We would have fallen through the ice right up here. And of course, all this is in fractal format. We're on the 4-hour, but if we go down to say like the 30-minute, we'd see that, yes, indeed, this area that we fell through is another distribution. This is a common kind of distribution in Wyckoff where we have this rising wedge. It's a rising wedge. Remember, we have done a lot of videos on rising wedges. When it gets to the top of this wedge, it pumps usually. And the pump here is a FOMO pump, or a false rally. And it entices the FOMO traders to get in thinking we're breaking structure and we're mooning, only to dump the price and hang everyone. And another thing I call this are the devil horns. You have the two horns here, the horns of the devil. And so we would have fallen through the ice on the top VWAP had we, like right here, where this, you see where the VWAP line starts. Here, let's go ahead and remove these drawings and draw a new VWAP off the second horn here. Boom, right here. During the fall, we fell through the ice at this point, and this would have given us definitely the distributional bias at this point. Now remember, we're on the 30-minute candlestick, which I call the forensic. This is the forensic time. So when you really want to get up and personal and close and detailed with the spread, you go down to the lower time frames, the 15-minute to 30-minute, anything below an hour. And then to get like the bird's eye view of what's going on for the bias on the macro, you go to the higher time frames. You go to the 4 hour and above, what I call. So and so on both of those, we have found that we have fallen through the ice on the anchored VWAP from the top of this devil's horn, the horns of the devil, or this UTAD. And also when we went off the selling climax, it also showed that we had fallen through the ice. So we have a double distributional bias for Ethereum, in addition to the current Wyckoff schematic of this being a UTAD, which is basically a confirmation that this here was a UTAD, and this area where we currently are trending is a last point of supply, which is a redistribution. So with that, we can anticipate a further decline in the price action for Ethereum in the hours or days to come. So anyway, I hope this was a little bit instructional. If you don't know anything about Wyckoff or the ice and creek concepts, I really encourage you to study up on it. It'll really do wonders for your trading, give you an understanding of price action and volume and how important it is. Guys, the syndicate traders, the professional traders, they go primarily off of volume and price, pattern recognition, geometrical patterns, structures like wedges, triangles, all sorts of different, bull flags, pennants, and things like that, divergences. All of these things are replete in Wyckoff and in volume spread. And if you could use it in conjunction with things, not so much moving averages, but things that are tied in or indexed to volume. Volume is the main thing. Volume, which is VWAP, volume weighted average price. All of these things kind of go together. There's a common ancestor within them all. So I don't like to use indicators, but when I'm looking just to bolster or buttress my bias that I'm forming, I like to throw in some anchored VWAPs in the given trading range and see where the current price action, if it falls below, through the ice, or above and jumps the creek, it just kind of confirms really what I've already seen and calculated with the volume spread. And even down here in the range, we see that this was bound to distribute. This area here, this range here, was a distributional range. How do we know? Well, we had predominance of supply volume all the way through. We had building of supply up through it. We had some, demand tests, but the tests peaked out here always, and then we would see more supply coming in, canceling it out, all these failure to rallies. And so the distribution bias was already there in the beginning. It's just a volume spread just confirms it. So you need to have all those components together when you're looking at these ranges. And the more you do them, and the more you go and back test these prior ranges going back a year or so, you can go and reverse engineer all of these ranges, and you'll see a common theme arise in the volume spread with supply and demand and all that. And you can even go and do the VWAPs and look at the ice and creek concepts as well and see everything gel together. It'll really help you out, but it takes time, and but it's definitely a skill that is worthwhile to accumulate. It's a skill that could be very, very lucrative for you, and it's what I endeavor to teach in these videos, especially with those in my trading group who support me. Very, very affordable trading group, and you get all this instruction. And so anyway, let me let you go with that. If this video helped you, I'd appreciate it if you'd give me a like or subscribe, and that would help put this video up on the algorithm so other traders can find these what I feel are very important videos that can help people trade. If you like solid price action and analysis, Bitcoin updates, Ethereum updates, I do all the altcoins. I'm a full-time crypto trader and investor. Been doing this for 6 years now. So, and I think I have some information that could be beneficial to you to share. Go ahead, like, subscribe, and you'll get updates regularly. All right, guys, let me let you go. That's enough for me. Jesus, this thing went on 16 minutes. I got to find a way. I'm just so long-winded. I apologize. But anyway, all right, let me let you go. I'm going to drink more coffee, and I'm going to continue to look at this crypto. If I see anything, I'll let you all know. All right, guys, take care. Adios. Bye-bye. Bye-bye.